Did you ever think a single document could be the key to unlocking the door to your new home? Well, enter in the loan estimate, your roadmap or financial landscape of buying a house. Now, this document may seem daunting at first, but with a little guidance to read it over like a pro, we can ensure that you're getting the best deal on your journey in the home ownership. The loan estimate is a 3-page document you'll receive after applying for a mortgage. It's not just a piece of paper, it's a snapshot of all the costs associated with your home loan. It's designed to give you a clear understanding of what you're signing and what you're signing up for when you're buying a house. So here's how to decode the document. Section A, loan costs. This is where the magic starts. Section A breaks down all the costs directly related with loan processing, including origination fees, any points you may be paying to lower your interest rate. These fees can vary from lender to lender, so make sure you review this section. It's very crucial when you're comparing options and also making sure you're using the right strategy when buying a house. Section B, services you can shop for. Yes, you have options. Section B lists out costs like appraisal fees, credit report fees, and more. Some of these fees are negotiable, and you might be able to save some costs on the different providers that are provided to you. So definitely ask questions around there. I do recommend sometimes it's best to go with who is recommending them because they may work with them a lot. When you go with your own, you never know really what you're getting. So just make sure you have a conversation with the professionals you're working. Section C, services you can't shop for. These fees are services that are necessary for the loan and you don't get to choose them. There are things like flood insurance certification or tax monitoring services. While you can't shop around for these, it's good to know what these services are and what they're used for and why you're even paying. Title fees in Section E. Ever wonder who's insuring your your home for your title? Just like a car, you need to make sure the chain of title, the ownership chain, is clear and who's owning it before you and what happens after you buy the house. Now this section shows all the costs and what's being paid based on who's researching the title insurance history and ownership history, and also purchasing title insurance to make sure that anything that goes wrong after closing, it can be paid for and covered through that insurance policy. Section F and G, prepaids and escrows. Think of this as your mortgage insurance, your mortgage savings account for tax and insurance. Section F shows the upfront costs that you're paying into the account, and Section G outlines what you're paying monthly to ensure you have enough money in that account to pay those bills when they're due. Section H, other costs. This section covers a mix of additional expenses, including HOA or home association fees, if applicable. Obviously, not every house will have those. All homes have different fees, and not all homes will have fees in this section, but if yours does, it will be listed here. Bottom line, calculating all your cash to close. So on the bottom of it, you're going to see cash to close. The final section of the loan estimate tallies up all the costs in a grand total and what you'll need for closing. And it's your cash to close. This is the amount that you're going to have to bring to the table at closing. Sometimes, depending on the contract, you may have to bring a little bit more up front as far as different earnest money amounts, but cash to close is generally going to be the amount of money that you'll have to bring to closing. And it's important to understand what that is including and what that's not. The reason why I bring this up is your earnest money you're going to pay up front. Sometimes lenders will list that as a credit already up front. Sometimes they'll leave it out. So you just want to make sure you know whether your cash to close is including the earnest money or not, so you don't have a surprise when you get to the closing table. And remember, the loan estimate isn't just an estimate. It's a powerful tool in your home buying kit. Make sure you understand each section and how they compare offers, ask questions, and ultimately choosing a loan that's really best for you. Buying a house is one of the most significant financial decisions you'll ever make, and the loan estimate is here for you. So take a deep breath, grab a highlighter, get ready to make sure you can control your homeowner journey. And this guide will really help you, and it puts you well on your way to becoming a confident and savvy homeowner. Thanks so much for watching. My name is Kevin Brierton, certified mortgage planning specialist. And if you want to schedule your mortgage strategy call, go to mortgagestrategycall.com, and we can review your loan estimate together and review your home plan together. Thanks for watching. Have a great day.